Good evening, good morning to wherever you are in the world. Welcome back to another coffee hour where I'm just going to go over the stock market news. We do have some things in the lineup that we're going to be talking about here shortly. Mostly it's going to be about, because Davos already kind of wrapped up. So, I think a lot of the Davos news is kind of over and done with. Trump's not invading Greenland, which is good. Now there's a partnership, a framework, so we can all put that to rest. It looks like the stock market has been kind of just flat. There was no explosive news, thankfully. But we do have some news for commodities that we're going to be listening to. I think I haven't had a chance to actually review any of these videos, so a lot of this is going to be fresh, even for me. But we will also be talking, of course, about the broader AI market. We'll be talking about chips, semiconductors, and a little bit of, just broad market news. All right. We'll have a lineup for Goldman Sachs. Okay. So he was speaking. So David Solomon is the CEO of Goldman Sachs. So we'll just listen in on what he has to say. All right. So should be a pretty entertaining stream. Okay. There is going to be a lot of clips. So I apologize if, the commentary won't be there. It was kind of a slower news day. Not exactly a whole lot going on. Right now we're running into earnings season. So, earnings season is starting to kick off. I'm waiting for, of course, the major ones, the Mag 7, because those are usually pretty good indicators of what's going on. Of course, we also want to keep an eye on what retail is doing, right? Because that gives you hints into kind of the consumer mindset, what's happening with, just everyday people. All right. So I don't have an earnings calendar in front of me, unfortunately, but, we'll see, as time goes on, I'll get an earnings calendar. So again, hey guys, thank you for joining me. All right. Thanks for joining me. I know you guys could probably, are getting sick of finance news. Sometimes it could be a little poisonous. So for me, it's just something I like to always start my day with. It's just something I like to be aware of what's going on. Of course, I try not to overreact whenever things happen. All right. So with that all being said, let's get into it. Okay. So first things first, we're going to take a look at the S&P 500. And again, no major swings today. It looks like, it's just a normal chart, right? S&P 500 actually finished in the green today with 55 basis points. Dividend Sith, hey, good evening. Appreciate you for joining. R14 Real, appreciate you. So good for the S&P 500. Again, no major chops like we had over the last couple of days, which is absolutely crazy. So congrats to anyone who did buy the dip. I myself am just kind of holding off on buying any dips for now. I'm actually thinking about increasing my metals exposure because, there's just been I'm looking at my metals picks and they're just going bonkers right now. They're just going crazy. But anyways, not to try to persuade you guys or get you excited, but man, it's crazy to see these things, how fast they move. And again, these are broad-based ETFs. Bitcoin still hovering under 90,000, unfortunately. Okay. We haven't been able to break that 90K and get back up to, that 95K level again over the last couple of days. Just thankfully there has been no new news, from the Trump administration, basically, because it seems like, again, we all know this. Whenever he does something very audacious, or says something really dumb, usually the markets react like crazy. So, again, looks like just for the last day, it's been pretty quiet. All right. Gold still going higher, guys. Gold up almost 2% today. Almost up 2% today. Again, last year when we were covering gold, it just kept going. Like it just would not stop, right? It just wouldn't stop. And, there's all this talk of, recession and depression and stagflation and deflate, all these buzzwords you hear in the media, the doom gloom stuff. And it just kept going higher and higher and higher. Then we had the dip and now it's just continuing its run up, right? One interesting note about gold. And I heard it on an interview recently, and I wish I gotta start keeping records of this stuff. But there was a commodities expert in the space, And what he was talking about, and I'll give him a shout out. His channel's Rick Rule. If you know him, you know, put it in the chat. Rick Rule's a very intelligent guy. I've watched a couple of his interviews so far. Very, very intelligent person. He's basically a subject matter expert when it comes to commodities, right? When it comes to gold, silver, metals, and that type of stuff. But anyways, he basically said kind of something similar to what Michael Saylor has said, right? Michael Saylor has said, you know, usually people fall in love with the idea of Bitcoin going up. They buy at all-time highs or near the high, right? And then, you know, it shoots up and then inevitably comes back down, right? And when it comes back down, usually people get, you know, flushed out, the paper hands, right? He calls them the tourists. The same thing goes for MSTR stock. People who bought MSTR because it just kept going up, because Bitcoin was going up and then it, you know, got flushed out, et cetera, you know, paper hand tourists. So what Rick Rule was saying, he said something exactly the same, right? Which I think is it's fascinating to hear these people say these things. So, you know, Rick Rule said this about people investing in metals. Right now, there's a whole lot of euphoria, right? Everyone's getting in, everyone's getting excited. Finally, the metals market is making its way around YouTube and the media. Everyone's talking about metals and getting into metals, metal miners, getting exposure to metals, right? But eventually, there will be some type of correction or pullback, whatever you want to call it, and it's going to flush out a lot of these paper-handed, you know, people, a lot of these people who fell in love with the narrative, right? And then when the price changes, people get flushed out, right? They sell, right? So the point I'm trying to make is, if you know you're investing in something, again, always have a thesis. Why are you investing in it, right? Because if the price changes to the downside, what changed? Did anything change about gold, or did anything change about, you know, MSTR and why you invested in that, or any stock for that matter? Did anything fundamentally change? Right? The same thing goes for high yield ETFs, et cetera, the whole gamut, right? Did anything actually change? If nothing changed, then, you know, why would you sell? Of course, people look at their portfolios and they see the red, and that's what really gets people emotional, and then they end up selling out, right? Only for, you know, like gold, he used an example where gold went from $200, basically $200, I don't know if it was an ounce or something, but it went from $200 down to $80, right? And then people were selling in droves. Like, people just did not like gold anymore. And then it jumped up to like $400 an ounce or something. So again, it's a tale as old as time itself. Just, if you invest in anything, have conviction, have a thesis of why you're investing in it, a reason for it. Because the people who are getting in right now because of hype, you know, they might be buying at a time where there could be a really severe correction, and then they're going to sell out, right? So again, just be aware. That's it. That's Eugen's lesson, right? That's Eugen's lesson for the day. All right. That's Eugen's lesson. You know, I thought that resonated really well with me, and I wanted to share that with the audience. All right. So anyways, execute order 66. Absolutely. Money is the motive. Buy stocks and ETFs daily. One of my cores paid yesterday. TDAC. I bought GDX at $73. It's over 100. Bro, tell me about it. I own GDX right now, and I only wish I bought more, right? That's the going phrase. And honestly, I think I'm going to be increasing my GDX position. Hello, everybody, says Victor Senk. Hey, welcome back. All right, guys, let's get into it. Okay, Goldman Sachs lifts 2026 gold forecast of $5,400 on strong private central bank demand. We covered this before. A lot of the private central banks, well, the private and central banks are, you know, upping their gold reserves, right? So Goldman Sachs came out with this. Goldman Sachs raised its end 2026 gold price forecast of $5,400 an ounce, citing stronger than expected central bank buying and sustained investor demand. All right, so now that euphoria stage is starting to come in, all right, the bank increased its December 2026 gold price target by more than 10%, okay? We were at, I think, 5,200 or 5,100 last year when they raised this, so now they raised it again. So, I mean, we're already close to 5,000. It probably will be 5,000 in the next, like, couple of weeks, if that, right? assuming that private investors who purchase gold as a hedge against macroeconomic risks will hold their positions through year end. I'm one of those people, that purchase gold as a hedge. So I definitely have no intention of selling my GLDM position, primarily because one, it serves as a hedge in my portfolio against the volatility because of all the high beta names, the AI trade, all that stuff. So to me, it's better than bonds, right? It's providing more of a cushion, a better cushion, and it's a bet against the debasement trade. All right. I keep talking about the debasement trade. But yes, it is a bet against that trade. I think that trade is definitely starting to shape up this year. And it's more of a macro theme than anything. All right. So we're going to listen to an industry expert here in a second. Talk about commodities and kind of why they think this is going to be that cycle. All right. So again, this is going to be a very clip heavy stream. I have not watched all of these. I haven't watched any of these clips actually. I was just going through my news sources and then just clipping the ones that I think are kind of interesting. So I see we have Skeptic in the chat. Hey Skeptic, if you got an ETF, of course you always have an ETF. But if you have an ETF you want to cover today, please drop it below. And that goes for anyone, all right? We can all learn together, all right? That's the whole point of this channel, is that we can all learn, grow, make money together, okay? There is no gatekeeping here, all right? No gatekeeping here. As a matter of fact, on the quick note on the topic of gatekeeping, there was one of my streams where someone had seen me before, and they were like, hey, do you offer coaching, right? Do you offer coaching one-on-ones, et cetera? I said no. However, I do have a strategies playlist that pretty much goes over all my high yield stuff, right? Because that's what they were more or less looking into. But there's so much more, right? There's so much more to investing than just high yield stuff. I'll probably like doing videos now is kind of a chore. I like doing the live streams. The live streams are so much better because it's easier. I get to talk with you guys versus trying to, teach this subject. It's very niche, very specific topic. And even though I can teach it, it's like I want to make sure the video is of high quality, and I'm a perfectionist, probably the worst. So I always have to re-record, and then, I end up just, not doing the video, or the videos you've seen are probably the best that I could produce. Even though, like, if we're having a conversation like we are now, I could just tell you up front, if you're a new investor, you have no net worth to your name, etc. Anyways, I'm getting way off topic here, guys. Let's listen to the subject matter expert over here, John Chia. I'm going to butcher this name. I'm not even going to say it. Let's get into it, guys.
Commodities. Sprott Asset Management CEO John Campaglia joins us now. John, great to see you with us. In terms of flows, what have you been seeing? Have they been just as strong?
Yeah, we've seen incredible investor interest, particularly at the end of last year, which is not a normal period of investor engagement, and we've seen continued momentum into 2026. The real winner so far, I would say, has been physical silver. There are a number of factors that are driving investors to physical silver. It's hard to believe that it took, from 2011 to late 2025 to breach the old high. And since we did that, silver has not looked back. It's almost doubled since breaking the old high. So it's had incredible momentum over the last few weeks.
At what point do you think demand destruction comes into the silver price picture?
Yeah, it's a good question. We've had some solar panel makers in China already say that with the price of silver at these lofty levels, they're going to start to substitute to copper. Not as efficient in terms of the use in a solar panel, but you will see some lower value, I think, products try to substitute. So that's normal. But I think what's really overwhelmingly driving the market is investor demand. We've seen a lot of investors around the world returning to silver. And one of the big buying groups is in India. And the reason for that is simply because as the price of gold is now knocking on $5,000 an ounce, investors in India cannot afford to buy gold. So they're substituting towards silver as an alternative. So we saw 85 million ounces of silver being imported in India just in the month of September and October. And we see continued investor demand, not only from buyers in India, but also ETFs. We've seen.
So just real quick on the whole India thing, I did not know this. Again, listening to I believe it was, I believe it was Rick Rule. I could be mistaken. It might have been Mr. Sprott himself. No, I can't remember. Anyways, basically what they were saying was that silver was in India was more of a poor person's kind of like way of saving. So people were buying a lot of silver, and like they couldn't afford gold, right? So silver was actually a cheaper way of preserving wealth and growing wealth in India. And even out here, in Southeast Asia and definitely in the Middle East, like gold is like the standard, right? Everybody buys gold as their savings. They're not really using bank accounts. Like at least here in Thailand, I've noticed that, like investing is not really a thing, right? Investing, brokerages, that kind of thing, it's there. The financially literate will use those, but everyone else will kind of just buy gold. Like everyone else just buys gold. They'll buy gold chains. They'll buy gold necklaces, gold rings, that kind of stuff, because that stuff holds its value, right? And here in Thailand, gold is pretty damn pure. It's like as close to 24 karat as you can get. So definitely, something to think about. But anyways, I wanted to make that point. Also, another point he mentioned was that people are, probably the industrial base is going to not stop, but they're going to start replacing silver because it's expensive. It's hard to probably acquire because it's becoming scarce. Everyone's buying up the silver. They'll start swapping to copper. Okay, so he said that's pretty normal. But one highlight he said, that's a big point, is the investor demand. Okay, investor demand. If you're just joining us, we just talked about this, but investor demand is going crazy right now for the metals market. But don't be a tourist. Okay, don't be a tourist. And what I mean by that is don't just buy because you like the narrative now and because everything is going up in price. Because at some point there will be a correction or something that's going to drive these prices down. And will you be able to weather that storm? Will you be able to accept that, right? So you need to invest based on a thesis. But anyways, let's continue on conviction. Invest on conviction. All right. So let's continue listening to this gentleman.
Seen very strong inflows into the Sprott Physical Silver Trust over the last few months.
Hey, John, it's Tim. I've been following you guys for a long time, and you've been out front on gold and silver, but also on uranium. And, my sense is that much in the way we're talking about demand from the investor side, I sense that there is institutional demand for PGMs. And first of all, it shows in the price of your stock. Your stock has been a rocket, and I think a lot of investors have figured out that you grow, your revenues grow, even though there are economies of scale. Let's put it that way. I guess I'm just trying to understand, to the extent that you're seeing a scramble in the institutional investment community to have more exposure, and whether that means owning PGMs as an institutional allocation with the only handful of people. That's a very small group that can actually do it in an institutional way, and also the business overall, which is that this is an asset class that, if you've been in emerging markets and other places for a long time, gold's been growing and growing. But precious metals, what I'm hearing from the biggest money managers in the world in terms of RIAs and whatnot, is that you start hearing about 10% allocation to PGMs, and plus of that means, I think institutionally, let alone retail, they're short, and I think there's more to go. Just comment any way you want, because I know you can't talk about strategic stuff, but I think it means we're still very early.
Yeah, I think we're incredibly early. I think you have to take a step back and think about how many of these markets were in, 10 or 12 year range bound, patterns, whether that was platinum or palladium or copper or uranium. A lot of these metals kind of zigged and zagged and didn't really do a whole lot while tech stocks were reaching all new highs. That period obviously led to very little capital investment, which is why we have shortages and scarcity of many of these metals today. So when capital starts to come back, it can have an immediate impact on the values of these metals. And secondarily, you're seeing governments around the world, including the United States, obviously identify the strategic importance of a lot of these metals for energy security and national security. And there's a big push right now to reshore not just mining in the United States, but also processing of these key minerals for defense, technology, et cetera, back to home soil. So you're seeing the potential, introduction of government buying of metals and stockpiling of metals, kind of like, what we had in the Cold War, which is obviously far behind us now, but it seems to be another buying group in the form of governments getting involved in some of these metal markets, which are also pushing prices higher.
Hey, JC, in this new sort of world order we're in, the repatriation of gold by a lot of countries is a story. How does that impact you at all? Does it impact you, I guess, is a better question.
It doesn't impact us. I mean, we're able to buy gold pretty easily in large volumes, given the amount of production. But I think you're raising an interesting point. As governments become less trustworthy of each other, you've seen some say, I want to move my metal, out of the United States, for example. Remember, why was this metal moved in the first place? Well, after World War II and the beginning of the Cold War, governments in Europe were concerned about holding physical gold in their countries, so they diversified by holding it around the world. The last 5-6 years, governments are saying, we want to bring our metal home, and that's something that we've seen in a number of instances.
Mm-hmm.
So what do you guys think? What do you guys think? If you guys don't know who Sprott is, because I honestly just recently discovered them myself. Maybe I'll pull up a link for them. But Sprott is definitely someone people should look into. I'm not trying to give away here all the secrets now, all the community secrets, but definitely someone people should look into. SprottETFs.com is the website. Again, I full disclosure, not being endorsed by them or sponsored by them, but I do own a few of these positions. Okay, I think they're very, very interesting. I would recommend people, if you're interested in the space, start Googling or start YouTubing this name. Okay, but there is some really interesting stuff happening in the metals market. You guys just heard from the CEO himself talk about what he thinks is happening, and that we're early. We're very, very early, right? Obviously, last year was a blow off top for silver or for gold more so than anything. But look, this is I'm in SIL. This is a Global X Silver Miners ETF. This was up 6% in a day. Absolutely crazy, 6% in a day. It moved really, really quick. If we look at the week, up 16%. Again, we had this crazy run up, and then it dropped, and then it's just running up again. This was probably a digestion phase. But guys, crazy things are happening, right? And especially if you're looking at the bigger macro view of what's happening. So up 26% just over the last month. Absolutely insane. What is going on in the metals market? Again, I'm still fairly new. I still only have a lot of surface level information when it comes to the metal stuff. I'm still doing my own, kind of research. I did open a couple positions, like I mentioned, just because I want to get that exposure. And honestly, I've been waiting. I'm waiting for an opportunity to really dump in. But I don't know if that opportunity is going to come at all. I mean, we might just see metals continuing to shoot up. So just some of the metals that I'm interested in, we have, copper, nickel, we have uranium, you have, of course, gold, you have silver, right? So those are just some of the metals that I'm interested in. You can look at miners for those if you're interested as well. Okay, moving on from the commodities. I think we talked enough about commodities. They had their moment in the show. All right, just quickly looking at the chat. Yeah, good rants by me. Yeah, I tend to rant on too much. Welcome, Super Straight Guy. Thanks for joining us, as always. Solana is the next in line to blow up. Theoretically, we'll see it. I don't know too much about Solana, to be honest. Again, I'm not a really huge crypto person. I just like Bitcoin, Ethereum. That is just from my pure experience, my own observations. I'm sure Solana's doing, got an actual project behind it. I've seen it mentioned a couple of times. Just on from these Wall Street people. So maybe there's a case to have Solana coin. I know the project is like a real project. It's not, like these meme coins or these altcoins or shit coins where they'll say, oh yeah, we hired Google engineers, we hired Meta engineers, we have AI engineers, and then it's a pump and dump coin. Like that last one, the New York mayor. Did anyone hear about that one? The New York mayor had a coin, right? It was supposed to fight I don't know. Like, I'll have to look for the article when we watch our next clip. But yeah, that was a total pump and dump. The New York mayor just made so much money off of that. But anyways, let's keep going on. All right, so we're going to listen in on memory. Okay, memory stocks. I would not have guessed, it was not on my bingo card, that SNDK, which is SanDisk, was up 1,000%. Up 1,000%. All right, we're gonna steal from Goldman Sachs here. Crazy. Whoa. Whoa, excuse me, guys. Can't type here today. There we go. Okay, SanDisk. I might have to edit that last one out. Okay, SanDisk up. Let's see. Over the year. Oh, this doesn't do percents. Okay, let me change that up real quick. SanDisk stock. All right, so here we go. Over the last year, up 1,200, almost 1,300%. Look at that run up. Okay, look at that run up. And we also covered before Micron. Okay, we covered Micron as well. It had a crazy run up. Maybe this run up is similar to SanDisk, is coming soon, right, to a theater near you. But up over the past year, 263%. And then, of course, we have SK Hynix, which is a South Korean company. They also do memory. Over the last year, 243%. Okay, so I think it's very important we pay attention to what's going on in the memory market, because it is a step below semiconductors, right? They usually lumped in kind of the same. We talked about Roundhill coming out with a ETF in the future called DRAM. I don't know what company is going to be in there. You know, probably, obviously, it's going to have the big top three: Samsung Electronics, Micron, and then, of course, SK Hynix. I would have never thought of SanDisk Corp. Like, they make the memory chips for your cell phones, your cameras. Like, I had no idea that this company, of all companies, was going to have this crazy 1,000% run up. That is absolutely wild. But this clip will give us kind of some insight. All right, so let's listen in.
Traditionally been cyclical in nature, trading on the whims of the computer refresh cycle. So is this time different? Let's ask CJ Muse. He's the senior analyst at Cantor Fitzgerald, covering the chips and memory space. CJ, it's great to have you here. This morning, Jim Cramer was looking at SanDisk down 4.5% and saying, is this finally a canary in the coal mine that the trade is running out of steam? But then this afternoon, the stock is trying to break positive.
Yeah, no, I mean, I do believe that this cycle is different. You know, from a NAND perspective, where SanDisk plays, we've been in essentially a 7-year down cycle. And so there's no urgency from any of the NAND players to add capacity. And when you layer in the incremental growth from AI, you know, I think we're going to be undersupplied for all of 26 and 27. And so what does that mean? Tremendous earnings power. SanDisk will report next week. And we've been writing in our notes, who will be first to $50 of annualized earnings, SanDisk or Micron? And quite frankly, it's a toss-up. But, you know, SanDisk is right there. And if you look at the March quarter, Street's modeling about $4 of earnings. And, you know, if you put in some of the crazy pricing that we've been hearing for Q1, they could, you know, earn as much as $10 or $12. And when you think about that seismic beat in the world of semiconductors, you know, I hearken back to Micron in December and, you know, NVIDIA 3 years ago for that kind of, you know, material beat to numbers. And, you know, in that world, it's hard not to want to be there. So, you know, we've got buys across Seagate, WD, SanDisk, Micron. We think the group continues to move higher.
Are we going to have shortages that affect the everyday consumer? And look at those price surges that we've seen in the last couple of months. Are we going to get in a situation where, you know, you walk in to buy a laptop and they say, you know, we don't have one, or the price doubles?
100%. I would tell
Really?
you that our working assumption right now is that PC unit volumes will decline 10% this year, and that smartphone unit volumes will decline at least 5%.
Because there's not enough chips?
Not enough memory. And so what you're going to see.
So you guys heard that. So the consumer PC market and phone market they're projecting that they're going to have these declines because the AI trade is consuming all of this memory, right? Consuming all these chips. This AI trade is fundamentally changing so much. Again, now the United States is very interested in uranium or you know, more or less nuclear power, right? That's all of a sudden really, really cool. And on top of that, power, just regular power, right? Increasing power to the grid to not only service and keep electricity and power energy, you know, cheap for, you know, everyday Americans, but also to fund or to power all of these large data centers that are getting built out everywhere. You have, you know, several of the hyperscalers, you know, Meta, Google, Amazon, they have their own data centers. You have OpenAI with the Stargate project that's, partnered up with MGX and Oracle. MGX is out of Saudi Arabia, for those who don't know. But they're building a ton of, they completed one of the largest data centers in Texas, right? I think it's Abilene, Texas, the last I remember. But it's over there, right? It's a huge data center that requires a lot of power. And now you also have just the regular data centers that are starting to, build out, and they're going to need more power, right? They're adding on or increasing their capacity. The existing data centers, 2 data center REITs, real estate investment trusts that are out there. 2 popular ones is DLR, Digital Realty Trust, and Equinix, okay, EQIX. So those data centers also need power, right? So there's also huge news. I'm trying to remember, is it not KKR? It might have been whoever owns Cyrus One. I don't know if it was Blackstone, but anyways, one of the large asset managers basically had their whole fund saved because of Cyrus One, right? They took Cyrus One private, and it used to be a public data center, and then they made it private. And that was their biggest return, right, for that portfolio. So again, like the data center demand is going to be substantial, right? Just substantial. And it's causing all of these secondary, tertiary, fourth derivative, plays to or sectors to actually go up in value, right? To become more valuable. Metals is one of them. So again, just big news happening all around us.
Is at the high end, higher prices, and at the low end, you'll see despecking of memory.
Wow. I mean, do you think this partly explains why an Apple, for instance, has been underperforming? In the model, which is all about selling iPhones, are they going to be memory constrained or no?
It's hard to say whether they got in line. We hosted a dinner with Micron a week ago, and they talked about, for certain customers, unable to provide 30 to 50% of what those customers want. And so it's unclear exactly who it is. But what is clear is if you didn't get in line in the last 3 months, you're going to have a problem this year. So I think, this earnings season, particularly for the PC and smartphone supply chains, that's going to be a major theme. And you're going to see real weakness on unit volumes.
That is fascinating. I don't know if there's a big trade there. I mean, investors probably suss this out already. Would that be like a Dell? I mean, I don't know if people are trading literally PC volumes. What else is going through your mind in terms of who might suffer from the constraints that you're talking about?
So I think the PC constraints are well known. And so many of my clients, are long memory and short the PC supply chain.
All right. Yeah. So it's, pretty much we get the gist of it. Memory is in demand. Okay. Memory's in demand. This is probably a third or fourth derivative from like a semiconductor company or the semiconductor like ETF, right? This is just more or less a summary that I found on Seeking Alpha for that video. But there's a key point in here that I wanted to highlight again because it's important. All right, given the added demand from high bandwidth memory and agentic-led AI servers, Muse, the gentleman that was just talking, does not see the shortage being fully resolved until 2028. All right, that's just what he says or what he's seeing. Again, there's going to be this insatiable demand for memory, just like there's an insatiable demand for semiconductors. All right. So a lot of these, ETFs, SMH is one of them. SOXQ. You also have XL. I always forget. I think it's XLK, XLE. That's the semiconductor for iShares. That is also going to be doing well. This is, a super cycle, right? An AI super cycle. So all of these other plays are going to be there, are going to be just going up like crazy, right? Just going up like crazy. So I see in the chat, Super Straight Guy says Chippy is now at $60 and he should have bought more when it was low. Yeah, I mean, Chippy's doing really well. I mean, everyone likes Chippy all of a sudden, right? It's been paying out very well. No NAV erosion, right? All that stuff. Again, the underliers, semiconductors, they're doing really, really well. If you believe in the whole semiconductor thesis that, easily over the next 4 years, probably for the next 10 years, that semiconductors are going to be in constant demand, that should send things a little higher, right? SMH, the semiconductors, Broadcom, NVIDIA, you have Micron, et cetera. But the thing that I've said this before, the thing about cepi that most people are discounting or just ignoring or not thinking of is if there was a gradual decline in the semiconductor space, not a sharp recovery, okay? Not a sharp recovery like we saw with Liberation Day. Not a V-shaped recovery where it just goes down and then it spikes back up, right? If it was a gradual decline over many, many months, like we saw in 2022 going into 2023, right? We saw from January 1st all the way up until October, where that was the actual bear market. It was just a grind lower, scenario that played out. Things like a cepi are definitely going to get wrecked. I mean, I'm just going to say it, they're going to get wrecked, not to scare you, not to get you out of cepi, but I'm just airing the risks that are inherent with cover call ETFs. I think, cover call ETFs are great. They serve a purpose, but not people have, again, they get the rosy glasses that, oh, this has done well. Like it's recency bias. This has done well, since inception, meaning it's always going to do well. Like that is not how you should look at those. You have to look at what the sector, what could happen to the sector or the individual companies that these cover calls are based on. That's why I'm a big fan of the index-based cover call ETFs. I mean, they're simple, right? The only one I own is XPay from Roundhill. But anyways, again, epic rant. All right, just rants. Okay, moving on. I'm just gonna skip this, or we'll cover it real quick. Semiconductor stocks see bullish at Susquehanna ahead of earnings. So Susquehanna gave a bunch of target updates. So if you're looking for ideas, here are a couple of tickers, right? Here are a couple of tickers for that semiconductor space, right? These are some I've never even heard of, right? We all know Synaptics. We all know Texas Instruments, those calculators. Qorvo, seen that. Have never heard of Skyworks, never heard of Wolf, all right? Never heard of microchip technology, or I've heard of Lattice Semiconductor. Lumentum, never really seen them. And these two have never seen them at all. Everyone kind of knows analog devices. So again, if you're looking for ideas, here's some price target changes, some tickers that you can consider for your own portfolio. All right. Super Straight Guy says, I'm the king of cover calls. Hell no, I'm not. I can't. I think I'm pretty sure I'm on record for saying I don't even know how to do cover calls, whether I shared that in the damn community and in public on these videos, right? That's why I kind of just outsource it to a fund manager, because I just don't do them, right? I don't know how to do them. I know people with really big hearts have been trying to teach me how to do them. I'm just dumb and hard-headed and haven't pulled the trigger on actually learning. Because I've been I don't know, whenever I get on this, and here comes another epic rant, but whenever I start to learn about a topic and I really get passionate about it or, really interested in it, I go just fully into it, fully immerse myself into it, like the commodity stuff. I've been nonstop just reading about commodities. I still don't even know what goes into a mining operation. I'm starting at really a higher level. I don't look at individual miners. I'm not at that, level yet. Maybe one day I will be, but I start looking at the bigger theme, right? The bigger theme, what metals can be used for. And then you start looking at, again, geopolitics, the administration's focus, where are they trying to go with all this, reshoring, outsourcing, all of this stuff. And basically that Davos conference was pretty much the answer, right? The United States is focused on reshoring, on bringing everything back home, stop outsourcing a bunch of stuff, right? So how's that going to affect, or how's that going to impact, the metals commodities market, right? I haven't even touched natural gas yet. I haven't touched a lot of these other commodities. Like I said, I'm still fairly new, but when I get into a topic or into kind of a sector, I really want to learn a lot about it, right? Semiconductors and AI really came easy for me only because my background is technology, right? I've worked as a technologist, an IT professional for so long. So it kind of just came easy for me. I've built computers, I've built servers, I've worked with, large enterprise networks, so I've seen a lot of these names, the Ciscos, the Fortinets, the F5s. I've seen these, the Dells, HPs. I've seen all of that stuff. Microsoft, Google Cloud, Amazon Cloud, AWS, all of that stuff. I've seen it. So I kind of already have a hold of it. So, but when it comes to like the commodities market, there's just so much interesting stuff, right? And I go all in. So like learning how to do cover calls and all that stuff has kind of taken a back seat for me. Like I said, at some point I'll grow up and actually start doing my own cover calls versus relying on fund managers to do it for me. But until that time, I'll just keep doing what I'm doing, and you're gonna see me doing what I'm doing. All right. So, anyways, let's listen to. Let's go back. Let's go back. So this is another clip. Let's see. Yeah, you know what? I want to stay on the AI theme, so we're going to move this one up. Yeah, so we're going to move this one up, all right? So we're going to listen to Michael Dell real quick, just talk about AI. So Michael Dell, obviously the founder of Dell Computers. Interesting person we should listen to. But real quick, I want to check the chat. All right, so we have Chippy's now at $60, bought it when it was low. R King from Skeptic, RKNG, new one from Defiance. Man, Defiance is getting their butts torn apart. It seems like a lot of people just don't like Defiance, even though they have some really good ones. We're all metal Padawans except Victor, says Skeptic. That's true. Victor is the Jedi Master. All right, Victor is the Jedi Master when it comes to this stuff. Super Stray Guy says, I'm not a commodities investor. You know, I was not a metals investor for a very long time. I just did not invest in gold. I thought investing in gold was dumb. I refuse to invest in bonds, right? I think investing in bonds is dumb. Maybe one day in the future, I'm going to learn that investing in bonds was probably the smartest thing, but right now, I just don't find a case for it. I had to really step back and kind of let go of this, you know, like, you know, when you're, and here comes another rant. But you know, when you're investing, right? You have this certain education, right? That geared you towards, let's say, the S&P 500, that geared you towards learning everything about the S&P 500, all the benefits since 1920, 10% returns, inflation adjusted, blah, 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 right? And then you start to have this bias towards equities. You're like, oh, I don't need gold. Gold is old man stuff. It's stupid, right? I don't need to invest in gold. I understand gold is a hedge, but when I pull up the charts, you know, it looks like the S&P 500 is better, right? You start building this bias for yourself. So it took, for me, at least a conversation, you know, with, you know, Victor, to actually understand gold a little bit better. And it really opened my eyes to how important gold really is. And not just gold, but metals, you know. So you know, again, coming back to the comment, you know, I'm not a commodities investor. I mean, I definitely am not a commodities investor, but, you know, I'm willing to learn and at least try my hand at it. And so far, it's been pretty profitable. I mean, as you guys can see from SIL, SIL, this had a 26% gain in the last month. And I've been investing in SIL. All right, I am invested in SIL. So, I mean, well, you guys can't see this. Let me show you this. There you go. Okay, yeah, so if we're looking at SIL, you know, SIL 26% over the last month. So hell, you know, I can learn, I can open up my eyes, open up my mindset, you know, to maybe just take a look, right? Worst case scenario, I figure out that commodities may not be for me and I just will avoid it. But again, for me, I'm not at that investing in individual miners, you know, thing yet. You know, I don't know if I'll ever get there. I don't even know if I want to get there. But I'm not opposed to owning the basket, right? I'm not opposed to just owning the whole market or the whole sector when it comes to something like a silver or a silver miners, right? So just my thoughts on all of that. You have two sections when it comes to miners. You have silver miners. These are more mature companies that are usually added to these. And then you have silver miner juniors. And I believe Rick Rule refers that to as silver morons, right? So there's silver miners and silver morons, and he calls the juniors the morons. And his words, not mine. Okay, so anyways, let's go back to, let's go back to Michael Dell. We'll listen to what he has to say. I think it's important. Again, he's one of the biggest producers of consumer electronics for, you know, people, right? Laptops, desktops. You know, they also do a lot of servers, a lot of company servers, enterprise servers, that kind of stuff. So it's important to listen to what he has to say because, you know, he would be an industry insider.
Yours is part of the whole AI trade. And what we've been trying to figure out now is where are we? What stage are we in this AI revolution? You've always been very optimistic. Where do you think we are right now?
I think we're on the way to the stadium. hasn't even started.
The
really.
game hasn't even started.
It's obviously
when does the game start?
I think it's getting ready to start. No, but seriously, there is, I would say, extraordinary demand, and you have to understand that we're shifting from calculating and computing, which is what we sort of did for 60 years, to thinking and helping people think. And that is just a total change. And the productivity and efficiency opportunities are very obvious, and we're starting to see those in not all the companies, but a small number of companies. The real opportunity is how you reimagine these companies. And we see this in the cohort of new companies that are born in 2025 are growing much faster than 24, and those grew much faster than the 23 companies. And so I think this is certainly the demand signal that we see from AI and the unlocking of the power of the data and the improvement of these models, which are extraordinary, but they're the worst they'll ever be. They're going to be way better in a year or two. The demand is in excess of the supply by quite a lot.
One thing that Wall Street is asking about now is how profitable for your business and for other businesses that are spending a lot of money on it.
Right. Well, I think there's a clear ROI that we and the customers that understand how to use this are generating. Certainly, our earnings per share have been consistently growing double digits, and we expect that to fully continue over the next 5 years. So, we have a great outlook for our business, and it is both because of AI and how it's helping us be a more competitive company, and because we're making the picks and shovels and selling them to all the great companies out there and the firms that are building these big models and doing all the inference. And I think it really is, we're way more at the beginning of this.
What's going on with pricing? Because we also, a big story has been, for instance, the surge in memory pricing. As you talk about demand outstripping supply in a lot of the parts of the building of this.
Well, this is a challenge because if you think about the way AI works, and let's go back to some of the early days of ChatGPT, right? This was a little over 3 years ago. Well, it takes 4 years to build a semiconductor plant. So 4 years ago, nobody knew about ChatGPT. Nobody was talking about reasoning models or agents and multi-agent systems and all these wonderful things. And so you would have had to have known all that to have put the capacity in. So we have a severe shortage in memory silicon and also in some of the advanced semiconductor nodes. And that.
Boom. You guys just heard it from him, from Michael Dell himself, all right, of Dell Computers. You just heard it, that they are having problems with acquiring memory, all right? We covered the whole memory thing right here in this part of the stream where we're talking about, Cantor Fitzgerald's CJ Muse saying that memory demand is insatiable right now. And not only that, but the companies that produce the memory, right? SanDisk up 1,200, 1,300%. SanDisk, you have Micron. Micron, they're going to be building these new fab plants. They're not going to be built tomorrow. They're going to take some time, right, to meet that demand for AI and for these electronics, right? So again, you have Michael Dell, basically one of the insiders, right, that's telling people they're having trouble acquiring more memory. So is this a case to, probably think about adding some of these companies? Actually, we can use this, right? Again, just looking at SanDisk, I got to be careful how I type here. It's looking at SanDisk up 1,300%. I would have never in a freaking 100 years would have thought SanDisk of all companies would be 1,300% in the past year. Okay, I mean, just look, that is just absolutely crazy. Okay, going on, let's see. Goldman Sachs. We could probably listen to this. Let's see what else we got. Well, real quick, Elon Musk's SpaceX lines up for 4 banks for IPO. So it looks like Elon Musk is going ahead with that SpaceX IPO. So those who are Musk heads, anything he touches turns to gold. You have something to look forward to. I don't know if SpaceX is something that's going to be on my radar personally, just because I don't know too much about this whole space frontier and kind of what they're trying to do. One of the more popular ones that have been around is Rocket Lab. Rocket Lab has also been doing well. There's a lot of, I won't say beef, but there's a lot of back and forth between SpaceX and Rocket Lab going for these government contracts. And at one point, because Musk was beefing with Trump, the government was like, you know what, we don't need SpaceX. We're going to start looking at Rocket Lab. And then Rocket Lab had a crazy move up, right? This all happened last year. I'm sure you guys remember. It was like watching two high school students fight. It was just ridiculous, right? It was a tweet war. But anyways, yeah, for those who might be interested, we have a possible SpaceX IPO. Now, there's been some crazy lofty, valuations out there saying that it's going to IPO at like $1 trillion. No idea. There could be that classic IPO launch. It's going to be a quick run up to the top and then people dump, right? That could also be a real thing. That was definitely the theme for all of 2025. Anything that IPO'd or that turned into a treasury company, a digital asset treasury company, had this crazy run up and then a dump, right? We saw that with BMNR. We saw that with a couple other companies that launched as DATs. So, you have Orb, ORB, 8Co that turned into a digital asset treasury for WorldCoin. So we saw that happen as well. Yeah, so R14 Real says that SpaceX is going to have to do it before Amazon releases their satellite internet. I forgot that they were also trying to get in that game. So if Amazon's also getting in that game, I wonder if Google is trying to also breach into that, or if they're just, like they don't want to get involved. It's crazy what these companies are doing. I mean, you would think like Amazon of all companies is trying to launch satellites in space. I mean, I thought they were just a website where, you go in and buy things, but now that's just a piece of their business. They also have Amazon Health. They also have Amazon AWS, Amazon Web Services, that does all the cloud stuff. So again, a lot of these companies are just doing crazy, crazy things. All right, so quickly looking at the poll here that we ran, and I forgot to check it right after we covered the commodities, metals interview here. The question was, which metals do you think will outperform this year? Right, gold all the way. 50% of you say it will. All right, 35% of you think silver is gonna rip. All right, 5% of you believe glowing rocks, i.e. uranium, will. And then 10% of you say, I don't know, I just own them all. So I'm with the 10%. I don't know which one's going to do the best, right? But I'd rather just own the basket. And that is exactly what I do, all right? Like I mentioned before, I do own GDX and SIL, all right? So SIL is for silver miners, GDX is for gold miners, right? So I have exposure to both, by proxy, both, assets, and I also have GLDM, right? That gold spot price ETF. You could go with GLD. I was talking with Nyse in the chat. And the reason why I went with GLDM is strictly because it's a lower expense ratio. I mean, that's really it. You can go down a rabbit hole comparing GLDM and GLD and what their vaults look like and how much gold they actually have, and then how does the trust work, and then yada, yada, yada. You can go down that rabbit hole. For me, it was strictly just an expense ratio type of deal. I just wanted something with a lower expense ratio and something that's very liquid. In case I need to cash out, I can cash out, right? I'm not saying GLD is not very liquid. It is actually very, very liquid. All right, so let's see. I don't think I'm let's see. I don't know if I want to cover this really. Dan Ives is always in this really flamboyant outfit, always sticking out. So we'll cancel that one. All right, Meta. Let's see. Let's listen in on Meta. So it's a 2-minute video, 3-minute video. I think there's a lot of Meta investors out there, so I think this is probably something worth noting. So let's listen in.
Your money and big tech, because there's a big new note out that is sending Meta skyward. Jefferies laying it on the line and laying out 5 reasons you need to think about buying the parent company of Facebook, Instagram, and WhatsApp. Now, those reasons include valuation, as well as a bullish look toward earnings. Meta has had a bit of a rough run lately. It is down 5 of the last 6 months. Let's shut up and get more now with the lead author of that note, Jefferies tech research analyst, Brent Thill. He's got a buy on Meta, a $910 price target.
Jesus.
And Brent, I'm going to just wildly speculate that the fact that Meta has been down 5 of the last 6 months makes the valuation more attractive to you.
Hey, Brian. Yeah, that's right. I mean, I think there's several factors. So remember at the beginning of last year, everyone hated Google. It was an AI roadkill. They weren't anywhere. And we think the same thing is happening with Meta at the beginning of this year, being treated that they are nowhere in AI and that all these investments are a waste of money. So we think that there's an analogy, which is last year, if you bought Meta on all the concern that all we were going to do is use ChatGPT to find everything, that was an amazing opportunity, and Google has gone up, 60+% since that moment. So we think there's a playbook in internet, which is buy the most hated name of the biggest names that aren't going anywhere, and that is Meta right now. Secondarily, the fear of all this AI capex, that they're going to blow all the money and not have any return. I think that's silly. I think we still see an incredible platform, and the engagement is off the charts in terms of their ability with advertisers to gain ad dollars. There's an emerging business in enterprise. Jefferies is looking at using some of their enterprise technology that they've developed for consumers with Llama to use for our own organization at some point. So we haven't gone there yet, but I think there's an incredible opportunity. Remember when Amazon launched AWS, everyone was like, wait, what is this? There's an interesting on-ramp with their open source solution in AI that enterprises can use, not just advertisers or consumers looking for the newest golf club if TaylorMade comes out with something. So there's just a bunch of different call options that we think could go right. And it's the most hated story right now. So great stocks have great controversy. This name has an incredible controversy going on. And so we could be wrong tactically when they guide, that maybe they come out with a really aggressive guide in CapEx and it disappoints, but we use that as a buying opportunity.
So what do you guys think? Essentially, Meta, they went on this really large buying spree last year, like a really epic buying spree. And food for thought, they actually ended up closing or laying off a bunch of their metaverse engineers. I think they actually closed that whole unit down. So their big bet on the metaverse was a complete big flop, right? But for Meta, they went on this crazy acquisition spree last year, getting all the best talent, right? They didn't even have like a way ahead for AI. They just wanted to suck up all the best talent. Like some people were getting up crazy pay packages, and they haven't even produced anything for Meta yet. Or the ideas for Meta weren't even really solidified. So Meta went on this crazy buying spree last year, and now they're getting into AI. They're building their own AI, all this kind of stuff. And I don't know, like AI or Meta's just flush with cash. They just have a ton of cash. For those who may not know, their big bread and butter is advertisements, right? Like Facebook advertising is crazy, a crazy revenue builder for them. And then of course they take that money and then try to, invest in other business ideas, that'll be accretive for the platform, right? You also have Instagram. Instagram ad revenue is off the charts. And they also acquired WhatsApp. In case you don't know what WhatsApp is, it's just a messaging application, encrypted. It's what, all the big dogs in DC are using, the DOD, right? Pete Hegseth was, caught in trouble because he had a group, like a WhatsApp group, and he's, sending all this, very, very classified information over it, right? But if you guys want the truth, I mean, a lot of people in the military do that, right? With very sensitive information, sending it over WhatsApp. Ask me how I know. But anyways, so they have these three business units. Meta does. They have WhatsApp. They have Instagram. These are all money makers, right? They're starting to do advertisements and build out WhatsApp platform with WhatsApp groups, WhatsApp communities, all that kind of stuff. So Meta just has a ton of money and they're spending it and then blowing it. So this is going to be their next bet, right? This is going to be their next bet is building out this AI, this AI platform. Right now, the idea I thought I saw or heard was that, Meta has this idea for using AI for advertisements, right? To improve their advertising. So that could be a big moneymaker for Meta. They also have Meta glasses, right? They partnered with Ray-Ban. They also have that, the Meta glasses where they have the cameras. There's a ton of YouTubers, ton of videos out where it's all from like a first person point of view. It's actually pretty cool. I've thought about getting Meta glasses only because, if and when I'm out in town, which is hardly ever, I would like to record that stuff, I think it'd be pretty cool. But okay, so we covered Meta. So shout out to any Meta investors. You guys should be doing well, right? I think the growth is there. We just got to see what Meta is going to do with hiring all of this talent versus just wasting a bunch of money. But again, they are flush with a lot of cash. So we're already pretty much at the top of the hour. We covered quite a bit, guys. I think we covered a lot. I'm going to skip this. I'll probably watch this a little later because I don't want to bore you guys to death. But this is Goldman Sachs CEO David Solomon. So if you guys want to check out that video, you absolutely can. But I want to open this up to the audience. I want to open this up to you guys. Do you guys have any questions, anything at all? Why is this doing this? There we go. Do you guys have anything you guys want to talk about in the chat? Do you guys have any questions? Any ETFs we can cover. I see Skeptic put pick and edge H in there. It covers all the main ones. Next is uranium. So this is when we were talking about the commodities, of course. But, I'm going to open it up. Do you guys want to talk about high yield ETFs? Do you guys want to talk about portfolio updates? I mean, the floor is yours. I think I've run out of ideas, at least for now. I don't want to keep covering more news clips. So again, I'm looking forward to Roundhill's DRAM ETF drama. Roundhill ETF. Let's see if they have it in the coming soon. This Japan bond situation will be a very painful and profitable experience. I know what the impact is at a surface level, on the markets. I always hear every time something bad happens in Japan, the bond spiking or interest rates rising, usually it's because, it impacts the yen carry trade. So usually it revolves around the yen carry trade. And the yen carry trade, and I know I'm going to screw this up. Let's just look at that, right? The yen carry trade, it's basically a way for traders to get cheaper dollars. So let's see, yen carry trade, what is it? The yen carry trade involves borrowing Japanese yen at ultra low interest rates, converting them to other currencies, and investing in higher yielding assets, profiting from the interest rate differential. All right. So that's essentially, whenever you hear things about the yen carry trade, that is what it is. And, whenever the interest rates go up or bonds go up, I could see why that would impact the U.S. stock market. At least I think so. The connection there is, these traders are getting, they're gonna have to pay a higher interest rate on the yen, that they converted dollars to. So now they just lost some buying power there. At least that's the way I understand it. If anyone's more smarter than me in this, please drop it in the chat. Let's see. R14 Real says purchase KSILV, KGLD, and SLVO and GLDI today in regards to metals. Man, you pretty much bought all of them. Pretty much bought all of them. What is GLDI? I don't think I'm sure I've seen this. Oh, it's a cover call ETF. Okay. Yeah, I think I've seen this one. I've never really dived into it. I've seen Silvo before. Let's see, Silvo. Okay, so it's both from the same company, UBS. Excellent. So income investing. So I just want to see if Roundhill has on their website the upcoming ETF for DRAM. Let's see if it's coming soon. Xbox. Look at that. Xbox. Look at that, Mars. They got another ETF coming out, a space and technology ETF. So that DRAM stuff, that's what I'm looking for, because I'm really excited about this one. Vibe is whatever. You know, they have the ETF called Meme. In case you guys didn't know, again, not being sponsored, etc., by Roundhill, yada yada yada. But Vibe is going to do a cover call on their meme ETF. So Vibe, more or less, if and when they come out with it, is probably their version of like an alti, right? Their version of just investing in highly volatile names. Retire on dividends. What's up, man? Hey, thanks for checking in. Yeah, I'm trying to be like you, bro. I'm trying to be like you. All right. I'm trying to be consistent, try to get these dailies in, you know, and we'll see where this goes. We'll see where this goes. I started at a very funny time. I mean, it's like 8 p.m. your guys' time, Eastern Standard. I mean, I don't know if that's the best time to be starting these things. I've kind of toyed with the idea of doing the market open and just, you know, kind of doing whatever's happening in the market open. But it's just so much stuff happens. I don't know if I could keep up with it. And I would only probably realistically be able to do 1 hour of the market open. But again, that would just be a weird time, especially for me, because, you know, that would be 9:30 p.m. my time until daylight savings or whatever. And then I would switch to 8:30 p.m. So I don't know. Maybe I'll do it in the future. I definitely want to get StreamYard going so I could start inviting people onto the channel. So yeah, this is here I go again, being a bad host. This is the page I'm looking at for Roundhill, right? So they got the Mars Space and Technology ETF that's coming out. They have Vibe. Speaking of all of that, let's see what new ETFs have come out from Stock Analysis. Let's see, Stock Analysis, list new ETFs. Let's see what new ones have come out. Retire on Dividend says this is a good time, end of day news update. Appreciate that. I think I'm gonna stick to this format at least for now. But of course, you know, I'm gonna probably try an experiment. I just like covering it because, like, right now when I wake up, like, this is morning for me. Obviously, you guys can probably see the sunlight coming in. But you know, this is what I do pretty much every day. Like, I'll just go through the news, right? And for my own education, right? My own awareness, I just go through the news. So we covered these yesterday, or we spoke briefly about these yesterday, ISSB and ISBG. These are income stacked or staked, whatever you want to call them. Mimi from Tuttle Capital. Tuttle Capital has been making waves, right? They've been coming out with a lot of good ETFs. So anyways, let's see what else we got. So, I mean, that was pretty much the big ones that came out. I'm actually kind of surprised that they didn't list the DRAM in here. The DRAM would be really, really good. I think that DRAM is going to be really exciting. So for any new people who are joining us, because I saw that we had a little spike in viewership. We talked about gold. We talked about commodities. Really recommend people go back and check this video out if you haven't seen it. And because this is a Sprott CEO, and they're talking about like how this is an early commodity cycle. So people should listen, man. People really should listen, because, I mean, look at GDX, you know, just for the month, up 18%, almost 20%. We're almost up to 20%, right? Looking at SIL, again, which is another one I have, freaking over the last month. This is miners, all right? These are just silver miners, gold miners, up almost 28%. But if we look at SLV, which is the actual, like, investing in the actual commodity, right, through a trust, you know, this is paper silver, as they call it. Looking at the 1 month, 41%. Golly, 41%. Up 41%. Let's see what gold is doing. Golly, damn. Let's go. So congrats to anyone who's gotten silver, right? Whether it's the actual SLV ETF or some other, you know, variant of that. I know, you know, a lot of people are getting into like K-Sil from Kurv, you know, making a little bit of income off that volatility. So congrats for having that. Let's see what gold is doing. For the past month, up 11%. Hey, I'll take it. I will take that. All right. Silver is just having this really crazy run up because, again, silver and gold, two different assets, right? you have silver that has more of an industrial use, right? It can be used in electronics. It's needed for national defense. It's needed for energy, all this other stuff. Whereas gold is more of a store of value, right? It's more used in a store of value. Yes, you can use gold for electronics. As a matter of fact, way back in the day, I actually hate to be able to say this, but way back in the day when I was working as a computer technician, we used to give away our broken computers and servers to this company that would pick up, because it was basically trash. But you can't just throw 50, 100 computers in the trash, right, outside in a dumpster. You can't just do that. So what they would do is the company that I worked for would hire a company to come pick them all up. And these servers, these computers, what they would do is they'd melt them down and then extract the gold from the processors, extract the gold from the motherboards and from the RAM, right? So they'd extract that gold. But also there's a lot of scrap metal. So they would sell the scrap metal, right? So it was just advantageous for both. But it's crazy to just know that company probably is doing really well, because we gave them a lot of computers. And it was a father and son that started up that business, right? And I'm sure they're doing very, very well right now, especially with the run up in gold. So absolutely crazy, man. Well, guys, I think that's going to do it for me. All right. We ran this stream for a whole hour. We covered a lot of news. All right. We'll be back tomorrow, of course. Tomorrow is Friday, so it'll be the end of the market. And, maybe we'll do a stream on Saturday or Sunday. I haven't decided which one yet. Maybe that'll be more of a chill and coffee time. I might have StreamYard up by then. So if anyone wants to come onto the channel and then talk, finance, talk, whatever, we can absolutely do that. I think it'd be really cool. I think it'd be really interesting to, kind of put some faces to, some of the audience members out here. And definitely want to try and get other, channels on this channel for sure. Definitely want to get other channels to come on and kind of give us their, what they're doing or how they're positioning their portfolios. A lot in the YouTube space. I mean, there's a lot of like young people who are investing in this stuff, right? So it's really cool. Like we all get to see each other kind of like come up, right? There's people who are doing like, they used to be high yield, like instruments, regular index fund investors. Now they're doing their own cover calls. And then we also have like strictly income based type investors, full porting into like full porting into like cover call ETFs. They'll probably have like 5, 6, 10 ETFs, right? And then we have like other like subject matter experts, whether it's commodities, chips, semiconductors, etc. I consider myself more of a generalist than anything. I just like to invest, again, based on themes, right? I like to invest based on themes. So I think it'd be really cool to just have other people come onto the channel and kind of just talk about what, their observations are and how they're like moving through this market volatility. Because again, I learned a lot from a lot of other people. I'm definitely not the smartest person in the room. I invest the way I invest, just based on the way I see, what makes sense for me, right? But I'm always open to hearing what other people have to say. Looking at the chat, we have Ranjit saying, I started buying gold 1 ounce bars at 3,800, but didn't buy more down there. Now pushing $5,000. Should I wait for a pullback? I mean, I don't know, man. I'm kind of struggling with that myself right now. I'm trying to find out if I want to increase my gold position. It's hard, man. It's hard. It's like, because we don't know what's going to happen in the future. We don't know if there's going to be this really nice correction where it'll create a buying opportunity, or it might just continue to climb higher, right? It might just continue to climb higher like we saw way back here, right? If we look back when Liberation Day happened, right? All-time highs down 5%. 5%. Look at that. 5% Liberation Day. Didn't really do anything. And then it just kept climbing higher. And everyone's like, oh, we'll wait for the pullback, right? We'll wait for the pullback. We're going to wait, we're going to wait. And it just keeps climbing higher, right? And then it had this really, really crazy run up back in October. And then we had a 10% decline, right? That would have been the premium opportunity to purchase anything, right? To purchase any gold. Now, is that going to happen again? I have no idea. I don't have a crystal ball. Some people say dollar cost average, right? Instead of if you had like a hypothetical, I don't know, $10,000, right? And you already, you don't have any gold, maybe start with 1,000. not financial advice, of course, but start with 1,000. At least this is the way I'd approach it. Start a starter position, right? And then have a plan. Like I would keep 50% of that 10,000 as strictly dry powder for a drop in gold. The rest of the 4,000, I would sprinkle in here or there, right? Maybe wait for like these little opportunities, these tiny little pullbacks, these little dips, throw in a little here, a little here, a little here, maybe $250 a week. I don't know, maybe $250 every 2 weeks, right? That way you're still preserving dry powder for when that inevitable dip does happen. But you're still not, being left in the dust. There's also the thought out there that, lump sum investing is better than dollar cost averaging. I subscribe to both, thoughts, dollar cost averaging and lump sum investing. But, it's like, do you want a dollar cost on the way up, which would actually reduce your, kind of like your gains, right? Your total return. Or do you want a dollar cost on the way down, right? So let's say you had this crazy dip right here, right? And you're scared to buy. That would probably be the time to buy, right? Instead of waiting for the perfect bottom, you start that position and then you dollar cost average on the way down. You deploy a little bit here. They call them tranches. You deploy a tranche of like $1,000 here. And then like, let's say it dips a little bit more, you deploy another 1,000 and then you just wait. You leave it alone. You don't, panic. And then you just let it go up. That is something I struggled with last year, right? Because all of last year was buy the dip, right? Buy the dip. And I was buying the damn dip, right? And it kept on dipping. I probably should have been a little more careful with deployments of capital. So that is kind of the way I'm going about it this year. I'm trying to be less, I'm trying to deploy capital less and wait for those larger pullbacks. Whether they happen or not, I have no idea. There's this prevailing thought out there that we're going to have that 15-20% decline. Whether it'll affect the metals market or not, I don't think so. I think, as you guys can see here, again, this was Liberation Day. You had the S&P 500 and NASDAQ drop 15-20%. Gold only dropped 5%. So are we going to see a 15-20% drop for gold? I highly doubt that. But I would be happy with, a 5 to 10% correction, right? If anything, maybe even I'd be happy with 5, right? I'd be happy with 5. But that's things you have to kind of figure out for yourself. Now, can a large correction happen? A very, very large correction can happen for gold? Absolutely, right? It absolutely can happen. If you're a student of history, right, we could see that we had gold here that just had dips and then it just had a grind lower scenario, right? Look at that. A 44% dip, but this was a very slow grind over 4 years. Okay. Would there ever be a dip of 50% in a single month for gold? Doubtful, very doubtful in my mind, right? Here we see, 2008, right? 20% decline. It's probably more than that, to be honest. But yeah, you can see it right there, 30% decline for gold. And this was in 2008. All right. GFC timeframe, great financial crisis. Banks are all going, all getting liquidated. Then the government comes and saves them. You had the real estate market completely get wrecked. Good movie to watch is The Big Short. Even if you're not very literate on all the terms that they're talking about, I really think it is a great movie to watch, especially if you're, kind of passionate or if finance is a hobby of yours. Absolutely phenomenal movie. And they explained a lot of complex concepts really well too. Like the Jenga tower of debt, right? That Ryan Gosling was playing, right? He had his quant basically talking about this. Or build this freaking tower of debt. Really good movie. So let's see what else we got. Appreciate you, Numex. Appreciate you, G-Bro, always. All right. R14 Real said, Ranjit pullback may never happen. Distributors limiting sales, making it hard to purchase silver already. Yeah. The U.S. Mint, and I know I said I was going to end the show, but we got such good, conversation going on. But yes, the U.S. Mint had stopped their silver sales, because there was not enough, right? As of January 2026, the U.S. Mint has significantly increased prices and temporarily paused some sales of silver. So again, even a large, seller of silver has stopped. okay, or paused, and they didn't stop indefinitely. They just paused it because there's some market manipulation happening in the silver's market, at least from my observations, just looking and reading what other people have said. It seems like there's a lot of manipulation going on. They're selling silver that doesn't exist, right? I don't have the exact numbers, but imagine that, 100 million, that's probably too much. Let's say 2 million ounces of silver are mined every year, right? These are just fictitious numbers, right? It's way more than that, but 2 million ounces of silver are mined a year, right? Well, they're selling 4. They're selling 4. They're selling 6, right? I posted in the Discord, and this is like absolutely insane. But I posted in the Discord that there's this brokerage offering leverage trading on gold. Okay, this is absolutely crazy here. Look at this. Trade gold with leverage up to 1,000. Like, how crazy is that? Gain an edge with every ounce. You're gonna gain an edge with every ounce, and then you're gonna blow up the market. They're treating this like this is the Bitcoin crypto markets, right? You're getting all this insane leverage. But that's the way the world is moving, right? It's just more and more leverage. The SEC came out and they're putting a halt or a pause on a lot of these fund managers, Defiance, yieldmax. Those are just some that come to mind that offer some of those crazy leveraged ETFs, 200%. They're trying to go for yieldmax 300%. Granite shares, I'm sure, was also a part of that because there's a lot of Granite shares, yield boost products that are all just 200%. Cover call ETFs. So this is like pure degeneracy, right? GDXU, which is a 3x levered product on GDX, right? GDX is the gold miner. This one pales in comparison to what you can do with this broker, right? Whatever IC markets, right? 1 to 1,000. That is pales into comparison, right? Look at that. Look at that. Absolutely insane. Up 12% today. So this one's a very spicy one. I am too scared to do it, to get into this. There was a call out for 127 last year by one of the members in the community. So he had called this out. It came up to 128, right? And then from here, November 4th up was like 100 and something % gain, some crazy gain. Looking at the chat, so Ranches says, I'm going to Costco every 2 weeks. So I mean, cost average. Or are you saying you go? Yeah, okay, dollar cost average. I see Costco. I'm like, you're going to Costco every 2 weeks? So I don't care about price. DCA to the moon. Absolutely. I mean, that's one great way to do it, right? That's one way you can absolutely do it. And there's, if it fits with your timeline, if you're young, it makes sense. It could make sense, right? Did you hear about the SEC cracking down on leverage ETFs? Yep, definitely did. Certain organizations were called out. Yes, yieldmax was the one that was named, even though I think they were unfairly named, but it's because they're the biggest fish in the pond. So, of course, they were named. But you also have Granite shares. Granite shares is probably the biggest degenerate out of all of them. But yieldmax is trying to shoot for this thing called levmax, which would be 3x and 1x down. That's what based on the interviews I saw of Jay Petrocelli out there. I haven't seen really any interviews from him as of late. I kind of don't follow that crowd. Michael Coe, pretty smart guy. But you have Venato, who's I think the CEO of yieldmax, or Tidal, who's the CEO of Tidal. Mike Coe's a pretty smart guy. He's a CNBC contributor. He's been on around the circuit 100 times. I've seen him. I didn't really know who he was, and then yieldmax came out and said, or Tidal came out and said, we're hiring this guy to basically be our spokesperson, right? I think it was more of a credibility thing than anything, because Mike Coe's a pretty well-known name, at least in Wall Street. So that brought some credibility. He's basically going to be a spokesperson. I have not seen anything from Jay recently. I think Jay honestly probably took a step back. So Venato, I'm butchering his name. So I've seen him speak a bunch of times as well. They've been doing a lot of like spaces interviews and things like that. So I mean, hey, whatever, But yeah, yieldmax is the biggest fish in the pond, so they would be the first ones to get attacked. But anyways, All right, guys, I think that's going to be it for me. I really do appreciate you guys joining me for this stream and hearing me vent and rant and talk a bunch of nonsense and cover the news. But with that, appreciate you guys. All right, have a good evening, have a good night, have a good afternoon, wherever you are in the world. And as always, I appreciate you guys. I will see you in the next stream. Take care.